This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August the 2nd, the long weekend 2013. Our time is 8:45 in the morning. Our radio show runs on your favorite radio stations. The shows are archived on Harold's websites, HESradio.com or rarecoloreddiamonds.com. You can listen to them there. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. The show is portable. We go anywhere you do. Harold does daily market commentary on his websites as well. You can find it on the podcast as we start today's show. Jobs numbers out of the United States. It was interesting. ADP, they were predicting a big number. Trim tabs, they were saying a very poor number. And it was not the number that they had expected. They were expecting about 185. They gained 162,000 jobs. And it turned out that the unemployment rate went down to 7.4%. But the reason behind that, labor participation rate fell to 63.4%. Those not in the labor force rose by 240,000 to 89.6 million. To give you an idea, jobs created this year in the United States, 953 million. Of those jobs, 731,000 part-time. A record 21 million young adults are living at home with their parents. Not a great recovery, to say the least. Also, the Fed came out this week. They're keeping quantitative easing at $85 billion a month. No surprise there. Those that thought there would be tapering, I don't think that they got it right. They're kidding themselves. Also, the debt ceiling. Over 70 days now, just below the limit of $16.7 trillion. And at the end of September, they will actually have to deal with it. And the Republicans have said it will be a battle in Congress in the United States. Bank of Cyprus depositors will lose 47.5% over 100,000 euros. Remember, we were told it was only going to be maybe about a third. Now it's almost 50%. And then the bonus is you get worthless shares in a bank. UBS is going to pay $885 million over a fine on mortgage-backed bonds during the financial crisis. And here's another statistic that's interesting. J.P. Morgan has paid $7 billion in fines in the last 2 years, and were just recently went after by the regulators for manipulating the energy market. Steve Wynn, and obviously we know Steve Wynn, Wynn Hotels and Casinos, said it best this week when he was asked about the economy. He says, Las Vegas is managing to hold its head up. And if we have a real recovery in the United States, and I don't think we have a real recovery, I think we have a limp-wristed sort of crawl out of a hole, but a recovery is more of a robust word, and I don't see it in the country as clearly as the politicians do who are trying to sell it to the people. I think most of it is baloney. I think real inflation is way north of 10%. Everybody's dollar is going down. Buying power and living standards is going backwards for the working people of America, and that's taking a toll on what you would call a recovery. So I don't see it myself. And Harold, here's a guy, you know, he has businesses in China and he has them in Las Vegas, and he would know what the economy is like. He's a real person living in the real world, not a politician in a bubble in either the United States or even here in Canada. They know what is going on.
You bet they do, and he's a very, very sharp guy. He's a multi-billionaire and has built businesses from scratch, so he's certainly somebody that I respect. I stay in his hotels when I do go to Las Vegas. The fact is that what he's saying is true, because the recovery is not really happening here. It may look like that on paper because people are seeing stocks go up and things like that, but very few of the overall general public is involved in trading stocks. They got wiped out in 2008, so it's a very few that are still in that market at this point. And if you look at the overall economy, over 100 million people in the United States are on food stamps. That's an unbelievable number, and 75% of the population in the U.S. is a couple paychecks away from being out on the street. So, maybe Wall Street is making some money right now, but nobody else is, and it's a frightening situation. The other thing is that you can't trust the numbers coming out of the government at this point, or in fact, you haven't been able to trust them for years and years because they're just trying to make things look a lot better than what they are. They would love to see the unemployment numbers back down at 5%, but again, they play with those numbers. The numbers aren't accurate. There's no way in the world that is happening, because most of the jobs that are being created are part-time jobs, or people that were on full-time are being reduced to part-time, and you're going to see a lot more of that, and the major reason for that is Obamacare. The cost of health insurance is going to be so expensive for corporations that what they're actually doing is keeping their key people on full-time, but actually making a lot of their employees part-time because they can't afford to pay Obamacare, the tremendous cost of health insurance that corporations are being forced into paying. Now, let's say, for example, you're a business owner and you've got a medium-sized business and you've got 70 to 100 people working for you. The cost of health care can literally put you out of business. And this is what the government is now forcing corporations to do, is to take care of the poor. Now, that's the job of the government, but the government's attitude at this point here is that the wealthy are being asked to pay a little bit more and a little bit more and a little bit more and a little bit more, and before you know it, you've got a socialist government here. You've got the government who's taking care of, again, 100 million people on food stamps, and the amount of people that have actually gone from middle class to the poor class has skyrocketed, and again, they will be taken care of by the government. So it's a frightening situation to think about what's going on in the United States at this point. Now, what's happening in the United States is not only exclusive to the U.S., it's also happening in Europe, and it's happening in China. China has got a real estate debacle that rivals what we saw back with the mortgage crisis in 2008. There are entire cities in China that have been built that not a single person lives in. And the cost of these properties are astronomical, way more expensive than what most people could ever come close to affording. So, again, the situation in China, a lot of people think that China is the hotbed for making money, and according to the news that I have and the information I'm seeing, it's the exact opposite, that China could go under the same way that the U.S. and Europe has gone. So, again, these are very troubling times, very frightening times, and you really need to be extremely cautious with everything you do, because one mistake, one bad move could put you into bankruptcy. And the last thing in the world you want to do at this point is speculate. You want to be conservative at this point because it's extremely difficult to make money right now. If you look at putting your money in the bank, you're getting 1 or 2%, and by what Randy reported this morning with Cyprus, where after the insurance on your bank account, people lost almost 50% of their deposit. Just imagine what would happen if that happened here. Just imagine what people would do when they find out that 50% of the money that they have in the bank has been stolen by the bank, and there's nothing in the world that you can do about it. I mean, we would have people lined up with riots going on and people throwing rocks through bank windows and everything like that. But that didn't happen in Cyprus. They seem to have accepted it and taken it, which is a very frightening scenario. And I think, and I've thought this for quite a while, that it's a setup type of situation, that the bank in Cyprus that went under is more or less a model for what is going to happen within the near future, and they wanted to see how people were going to react to people stealing to the bank stealing their money right out of their accounts. And not only stealing the money, but then giving them worthless bank stock in exchange for the money that they were supposed to get. So, again, when something like that can happen, and there's nothing in the world that you can do about it legally because you can't fight City Hall type of thing, I mean, that would not go over very well here in Canada and the United States, but I think it's coming, and I think that you got to be very, very careful. In fact, a lot of the banks in Canada, are going through changes, and they're so concerned, which they should be, about money laundering and things like that, but to a point of being ridiculously conservative in some cases. And again, these are different times, and different times bring on different types of measures, and a lot of it is out of desperation. Now, this was a slower week in the market. Again, it's still the summer, and July and August are the two biggest months for vacation, so a lot of people are gone, and a lot of people will be gone for August. So we do anticipate that the markets will continue to trade in a range, but at least gold is trading above 1,300 at this point. It traded most of last week above 1,300, and then it dipped this morning and yesterday because the U.S. dollar was strong, and gold actually has had a big range today. Gold traded as low as $1,282.70 and as high so far of $1,319. So you've seen basically almost a $40 move in gold from high to low today, and right now we're up $6.40 in gold. We've seen mostly on Fridays that the gold market has backed off because, again, a lot of the traders leave for the weekend, especially in New York. They tend to go up to the Hamptons. Similar situation in silver. Silver was as low as 19 and a quarter this morning and as high as 20.41. We're basically trading right at 20.07 right now. So you've seen, a fairly substantial, over $1 move in silver this morning from high to low. Platinum's up $2 on the day at 14.47, and palladium's down $3 at 7.33. On Thursday, the market, the Dow Jones was up about 130 points. It's down 50 right now, as we're actually taping the show at 15,579.60. The Nasdaq is down 4 points at 3,672. You've got the Toronto Stock Exchange up 22 points at 12,616. The U.S. dollar, which was up very strong yesterday, is down 36 points today, back at 82 cents. The Nikkei is actually up 460 points at 14,466. And crude oil has been on a bit of a roller coaster. It did hit a high of 108 about 2 weeks ago. Then the market backed down a little bit, and then on Thursday of this week, the market went down over $2. It was up over $2 on Thursday, and we hit a high of 108 again. We're down about $1 on profit taking. So oil's actually done extremely well, and we're trading right now at 107 in oil, and we are still very bullish on that market. It's been disappointing to see what these banks have been allowed to do in the gold and silver market, and also what Randy did report this morning was the tremendous fines that J.P. Morgan and other banks received, and there's more of this coming, how they traded the energy markets illegally, how they traded other commodities illegally, probably gold and silver included in that. Now, if they did get fined that amount, which they did, you can imagine that they made 10 times that amount by fixing the markets. So it's funny how that happens in the sense that J.P. Morgan, as an example, has been charged and fined for manipulating certain commodities markets. However, the fact is that they made so much money doing so that it prompts continuing to do so. And it just goes to show how pathetic the regulatory bodies are here in the United States. Because when you look at the Commodity Futures Trading Commission, which is the federal government, and their job is to police the futures markets to make sure that they're safe and everything has been done legally, the fact is that none of that is happening. And it's proven this week because J.P. Morgan got charged for trading illegally in oil. And soon that's probably the same thing that's going to happen in gold and silver. So they get a slap on the wrist. They still ended up making billions and billions of dollars. They pay a little fine. It's swept under the rug. But how about the hard-working, everyday men and women that bought gold and silver for the right reasons? And the fact is that the reasons that gold and silver went down were nothing to do with the fundamentals of the market. It had everything to do with the overall appearance of how the economy was going to be resurging. So the fact is that people lost money in these markets because the Commodity Futures Trading Commission, the federal government that polices the futures markets, did not do their job. And I've always said, I just don't understand how in the world an organization like the CFTC can sit back, watch these markets get destroyed in the ways that they have been, and then do absolutely nothing about it. And that's their job. It's their job to police the futures industry because everything in the futures markets or in the stock markets are regulated and they're supposed to be above board. But we know that that's not the fact. In actual fact, I'm surprised that people are still trading in the commodities markets at this point because of what happened with MF Global. MF Global was a commodity futures merchant means that they held clients' funds and traded and had trades go through their corporation in which they get paid a fee for. So basically, when you open up a futures account, your money is put into a segregated account, which is the same thing as an escrow account when you're trading in real estate. It's protected. It's never supposed to be touched. And basically, what happened with MF Global is they've held all their clients' money in these segregated accounts, and then they stole the money to the tune of $1.2 billion. Now, when something like that happens, it's not only bad enough that it happened and the Commodity Futures Trading Commission and other regulators didn't know and didn't catch it in time before everybody lost their money. However, the integrity of the futures market is based on the exchanges that trade them. So basically, the exchanges in Chicago and New York were supposed to make good on the $1.2 billion that was stolen, and they never did that. In fact, all the news was basically swept under the rug, and nobody really said boo about it. But the bottom line is that there's very little integrity left in these trading markets when companies and banks like J.P. Morgan and Goldman Sachs and all these other banks have been allowed to do illegal things in the market and basically just got a little slap on the wrist. So basically, once all this straightens out, and it will, and the gold and silver market get back on track, which it will, you're going to see that this market will come back, and not only come back and make and hit the highs that we saw in 2011, which was $19.20 in gold and $50 in silver, but there's no way that I don't see the market going much higher than that. We see triple digits in silver, and we see gold up to 3,500 to 5,000. And the reason that we say that is that the trend for these markets is going to go back to the way it was before the banks and the brokerage firms were allowed to illegally trade those markets. And we are going to have inflation. It has to happen because of what the Federal Reserve is doing. So it's only a matter of time. That's why I've always said to own the metal physically, to own it outright, so you don't have to worry about what happens in the futures markets. These markets will come back. They have the right fundamentals, which have really never changed, but the fact that the government and the Federal Reserve is keeping interest rates so low and printing so much money, there is no doubt that we are going to have inflation, and it's going to come a lot sooner than most people think.
There's only one company Harold recommends you use when it comes to investing in precious metals: gold, silver, platinum, palladium, Worldwide Precious Metals. Canadian company, in business for over 10 years, the entire run of this bull market. They are the experts in this very specialized field. We mentioned off the top of the show that in Cyprus, depositors with over 100,000 euros will lose 47.5%. If you're concerned about that, want to get some money out of the banking system into hard assets, into bullion, speak with Worldwide Precious Metals. You can actually have your bullion stored domestically or in a foreign country. Keep that in mind. Start your own precious metals investment account today. Instant liquidity in and out of the market when you choose with a phone call. Secure storage insured to the full value of your investment. 24/7 online access, and you'll have the use of a full-time precious metals expert from Worldwide Precious Metals. We have our free weekly newsletter. They can send that to you. This week, some of the material that I read off the top, where did it come from? From our newsletter. You can go through it in 5 to 10 minutes or spend hours if you want. We do it to give you that financial edge to profit and protect the money you work so hard for every day, every week, every month, every year. And now's the time to speak with Worldwide. Let them earn your business. Connect with them. 1-866-623-2002. The website is wwpmc.com. wwpmc.com. Telephone number 1-866-623-2002. In our newsletter this week, we have some great quotes in the silver section. City analyst Tom Fitzpatrick says, as seen in the gold to silver ratio, over the last decade, gold has outperformed silver when precious metals have been sold off. Silver is actually the better performer when the metals are rallying. This leads us to prefer silver going forward should the precious metals in fact be turning higher. And we have a great must-read article from City analyst Tom Fitzpatrick. It's on silver, it's on gold, and he goes on to say that he believes gold will move towards $3,400 to $3,500 by 2016. and silver should do even better on a percentage change basis. You can see those charts in the gold and silver section. A great article from King World News. Eric King interviewed Citi analyst Tom Fitzpatrick. We encourage you to read that. And an interesting point was made this week by John Embry from Sprout Asset Management. He says, I don't think a pure silver mine can mine profitably at anything under $25 to $30 an ounce. If you look at Goldcorp's latest earnings release, their silver mine in Mexico contributed to a huge loss to the company's earnings. But the fact that silver demand continues to be robust among those around the world that hoard physical silver, I don't think the price can stay down here for long. And when it goes, it's going to jump like a scalded cat. That's one of the things that we've been hearing a lot of. And of course, some big news this week with Barrick taking a massive write-down. And obviously, they're in a position as well where it's just not profitable to mine at current levels. Eric Sprott from Sprout Asset Management said this week on a silver market update, silver, I think, will outperform gold. Even when I look at this month's sales of coins by the U.S. Mint, they have sold 100 times more silver coins than gold coins, yet we only produce 11 times more silver than gold, and most silver is not available for investment. Yet we see this huge investment demand for silver. So I continue to believe that silver is going to be the investment of this decade. I see wonderful statistics out of India on silver. You can just imagine that if they can't buy gold bars and coins, maybe they will start buying silver. Well, that would just be a monstrous amount of silver that the Indians would need, and there's no way that the world can supply it. And that's happening right now in India. They're trying to limit the amount of gold that their citizenry can purchase, was just absolutely absurd. But it is happening, and if they start moving into silver in a major way, look out. There were two articles, too, that I want to point your attention to, and I really encourage you to get the newsletter from Worldwide, 1-866-623-2002 or wwpmc.com. They're on the use of silver in solar power. And there was one done by Jeff Clark from Casey Research, Silver Bull in China. And it's quite an extensive article with charts. It is a must-read. It really opens up to your eyes to the fact that when it comes to silver demand from solar panels, it is going to be absolutely monstrous in the years to come. Also, David Franklin and David Baker from Sprout have done an article called The Sun Shines on Silver. And it's along the similar vein to that article done by Casey Research, Jeff Clark, that China is going to be consuming tons and tons of silver in the years ahead as they start to move into solar panels. So I really encourage you to read the information that we have in the newsletter this week, 1-866-623-2002. Speak with Worldwide. Let them educate you as to why you should have your own precious metals investment account today. It is so critical. 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. As Harold was saying, the fundamentals have not changed. Technically, things are not good, but as Jim Sinclair, one of the great minds in the gold industry, has said, you can take technical analysis and throw it out the window right now when it comes to the gold and silver market due to what is happening with the Fed and quantitative easing. Going to come back and talk about diamonds. It was an outstanding week for diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping the show the long weekend, August 2nd, 2013. Our time is 9:10. Our show on your favorite radio stations. Also archived at hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. You can download the show, have it on your iPod, your iPad, your iPhone. We are portable. Should mention, too, that Harold does daily market commentary on his websites. You can find it on iTunes as well. I was speaking with Worldwide Precious Metals. They plan on being in Toronto sometime in the fall, and we will have more information on that. For those listening in Toronto, I know we have a lot of people that listen to our show there. We will be in Toronto and area in the fall. We will let you know a specific day and time. Harold recommends Worldwide Precious Metals is the company to use, and let them earn your business. Start a precious metals investment account today. If you're concerned about what's happening in Cyprus, where people are losing 47.5% of their bank deposits, and you're interested in getting some of your money out of the banking system and you want physical precious metals, you can have it stored domestically or foreignly. It's up to you. Get your own precious metals investment account, instant liquidity in and out of the market with a phone call, secure storage insured to the full value of your investment, 24/7 online access, and you'll have the use of a precious metals expert from Worldwide. Connect with them, 1-866-623-2002, the website, wwpmc.com. Harold's website is rarecoloreddiamonds.com, and obviously, back in August of 2005, Harold wrote an article that really, at that point in time, people didn't really understand the ramifications it would have. It was naturally fancy colored diamonds, the best kept secret. And that would actually start a revolution. And it started with Rare Colored Diamonds and Harold's website, Harold Siegel's FineAuctions.com, hsfineauctions.com. And it's taken the entire diamond industry by storm. And it's something that obviously Harold will talk about here momentarily, but Rare Colored Diamonds and hsfineauctions.com was featured recently on Bloomberg. Harold has been invited back. We have the video of when Harold was on Bloomberg a few Fridays ago, and it's just one of those things that is very, very exciting for those that are invested in this market and those that are interested in investing. In fact, we have a featured diamond this week. Absolutely stunning. It is a .30 carat, heart-cut, fancy, vivid, purplish pink argyle. And this is an amazing diamond. The heart-shaped diamond would be just stunning for an engagement ring. And we have a story in our newsletter that Rio Tinto is showcasing the world's rarest red, pink, and blue diamonds in Tokyo as part of their argyle tender. You can read that, connect with Harold. He'll be happy to send the newsletter to you. RareColoredDiamonds.com, or speak personally and privately with Harold at 1-800-432-1022. But Harold, back in August, and here we are August, the beginning of August of 2005, you wrote an article, Naturally Fancy Colored Diamonds, the Best Kept Secret. Here we are approximately 8 years later, and look what you've done to this market. Congratulations. It's absolutely stunning.
Thank you very, very much, Randy. I'll tell you, it's a phenomenal business. And again, when you look at what's available investment-wise today, almost everything is risky. And it all starts with putting your money in the bank. Number one, getting 1 or 2% return when inflation is higher than that doesn't make an awful lot of sense. But the fact is that at one time we were under the belief that keeping your money in the bank was a safe place to have it. And we know now that that's not the case either. After Cyprus, and we found out today or yesterday, that they ended up stealing 47, almost 50% of people's money. It just lets you know that, again, keeping your money in the bank is not safe. The same thing could happen in Canada and the U.S. and Europe. In fact, it probably will. And there's only so much insurance on your account. In Canada, it's $125,000. If you have $500,000 sitting in the bank and that bank goes under, you're only getting back $125,000. Again, that would be a horrific situation. However, again, the banking system is in trouble all over the world, and again, you just don't want to be caught and wake up one morning and find out that you can't get to your money. So by having interest rates and return on putting your money in the bank at 1 or 2%, obviously nobody can live off of that, so it forces people back into the more risky markets like stocks. And the fact is that we remember 1999 and 2008, and the markets look iffy right now because the recovery in the United States is not based on the economy and economic strengthening. What we actually have is the opposite. We've got a situation where they're putting $85 billion a month back into the market, and that's the only reason that the market is up at this particular point, because with 100 million people on food stamps and 75% of the U.S. population living paycheck to paycheck, how is the economy increasing when nobody has any money? So again, when you look at the potential for preserving your capital, which it means keeping your money and not losing it and possibly making a return on it, a profit, there's very few investments that can do that. And that's why we went to the diamond market. Now, when you look at the diamond market as an investment, not all diamonds are investment. In fact, most diamonds are not investments. And if you've watched Christie's and Sotheby's over the years, you realize that most people cannot afford to buy $5 and $10 million diamonds in which to invest in. However, I've done a lot of research into the diamond business, and I've been in this business for a long time. I've been in the investment business 35 years, and I found that there are certain diamonds that are very rare, that are not in the millions of dollars, and that have very strong returns. For example, flawless white diamonds. Over a carat, those diamonds increase by at least 15% a year. 15%. You tell me any other investment that would return 15% to you in a year, and there's no risk in the flawless market. In fact, the diamonds that we cut, because we're third-generation miners and cutters, meaning that we mine our own diamonds and we cut our own diamonds. And then those diamonds are mine to offer to my clients instead of the way it goes, which is a diamond comes out of the mine as a rough diamond. It's sold to a cutter. The cutter will cut and polish that diamond. Then he'll send it to New York to be graded by the Gemological Institute of America. And then the diamond goes back to the cutter, who has his own salespeople, who sells to dealers, who sells to retailers, who sells to the general public. That does not happen with my company. We cut our own diamonds. We mine our own diamonds, cut our own diamonds. We send them to New York to be graded, and then I offer them directly to clients. So you're not paying that extra 100 or 200% that the retailers are getting and that the other dealers are getting. We want our clients to make money. It's extremely important because, again, it's our business to make money for clients, and in the diamond business, it's a longer-term investment. You don't buy a diamond and then sell it the next year. You're just not going to make any money doing that. But if you put a diamond away for 10 years, the returns are going to be far greater than anything that you're doing at this point without having the risk of trading the stock markets. Because in the stock markets, you've got these hedge funds. And when the hedge funds decide to get out of a stock or get out of the market gets extremely volatile. We saw it in 2008 when the Dow dropped from 14,000 to 6,500. There are many analysts that predict the same thing is about to happen again. It could happen in October. It could happen in the very near future. You want to be diversified to make sure that if one market goes bad, that you have other markets that are going to protect you against that. And again, that's where the diamond market comes in. These flawless white diamonds, which are about 10 times as expensive as a normal white diamond, but they're perfect in every way. They're perfect color, perfect clarity, perfect cut, polish, and symmetry, and they are numbered pieces. They go up by 15% a year, and they're negative correlated to the stock market. In 2008, when the Dow dropped by 50%, these diamonds went up 50%. So if you've got a large stock portfolio, you're nervous, but you want some protection, these flawless whites will do that for you. So we love the flawless market. They're very, very important diamonds. The diamonds that we cut are perfect in every way, and when you buy the very best, you always get the most back for it. The other diamonds that we love, and Randy talked about it, are the diamonds from the Argyle mine. The Argyle mine is in Western Australia, and it produces 95% of the world's pink diamonds. Now, every year they take 55 or 60 of their top diamonds, over a half a carat, and they take them on tour to 6 different cities around the world, and they show these magnificent gems. The Argyle pink diamonds are the most concentrated form of wealth in the world. The mine that produces them, the Argyle mine, is going to close down. It's going to close down by 2018 in that area. And we believe that the price of these pink diamonds will skyrocket in price. In fact, they go up right now by about 15 to 20% a year, except for the vivid pinks. They're going up by about 50% a year. They're doubling every 2 years in value as we speak. And the closer we get to the mine closing down, which again is around 2018, these diamonds can increase 10 times what the prices are right now. So look on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the loose diamond section, and then look at our diamonds, our yellow flawlesses, our D flawlesses, and our Argyle pinks. When you go to the Argyle pinks, there's three different colors: the fancy pinks, the fancy intense, and the fancy vivids. The fancy vivids are the most expensive and the best colors. They're almost red in color. And these diamonds are doubling every 2 years in value at this point, and soon they'll start to double every year. These are the most amazing diamonds. We've invested very heavily in them for our clients, and they're on our website. So go to the loose diamond section of rarecoloreddiamonds.com, look at the pink diamonds, and again, the vivid pinks are the best color, but also the most expensive. You can start getting involved in Argyle pinks at about $30,000, and then they go up from there. So obviously they're not for everybody, because not everybody has $30,000 to lock up into a longer-term investment. But that $30,000 diamond could be worth $200,000 to $300,000 to you in the next 10 years. The other diamonds that we love, by the way, are the yellow flawless diamonds, and they're not overly expensive. They start in the $15,000 to $20,000 range. They have to be the internally flawless and the South African diamonds, and they go up by about 15 to 20% a year. That means that if you bought a $20,000 yellow flawless diamond and put it away for 10 years for retirement, that diamond will be worth about $80,000. So that's what we recommend to our clients, is to put some money into a safe asset like a rare colored diamond or a D flawless white. We are just very privileged to be on one of the greatest financial shows in history, the Bloomberg Report, just about 2 weeks ago, and it was phenomenal for our business. In fact, 4 to 5 million people see that interview. We were inundated with calls from all over the world because it's an international site, and then we had a seminar to follow up the interview, and we had over 450 people sign up for the seminar, and that was all over the world. So there's a tremendous interest from investors all over the world into the diamond market. We are the biggest players in this business. We're the largest cutters and holders of yellow flawless, D flawless, and Argyle pink diamonds. So we're also the only company that has the secondary market to resell these diamonds, and that's the main reason why Bloomberg wanted us on that show, is primarily because we were the one that created the H. Siegel Fine Auction business to resell our clients' diamonds, and that's never, ever been done before. We've had about 12 auctions so far, everyone extremely successful. The last auction we had was back in June, and we had 20 pieces up for sale, and all 20 diamonds sold, 17 Argyle pinks, 2 Cartier diamond rings, and an orange diamond ring. So now the site is going international, and we'll be able to sell our clients' diamonds all over the world and pick up other currencies for our clients. So not only make money on the diamond, but also make money on the currency also. These are very exciting times to be in the diamond market. Again, I think it's one of the most important assets that you could ever own because it's portable private wealth. They never decline in value. We have the secondary market to resell them for you. And again, some of them are negative correlated to the stock market. And in the case of the Argyle pinks, once this mine closes, there will not be pink diamonds anymore, and the prices have skyrocketed. In fact, if you look at what certain diamonds have done, back in 2003, at the Argyle tender, I bought a 2-carat vivid pink diamond, Argyle diamond. I paid $350,000 for it back then. It's now worth $3.5 million, and that was 10 years ago. That's how much these diamonds go up in value. So again, when you're looking at your overall financial situation, when you're thinking about, am I ever going to be able to retire, and am I going to be able to help my kids or my grandkids? The fact is that with the state of the markets the way they are, the stock market and commodity markets and things like that, it would be very difficult to retire. If you look at your retirement funds over the last 10 years, the chances are, even though the stock market is near record territory, they haven't made any money. And that will continue because the stock market is getting ready to make another big decline. Get some of your money out of those risky markets, get some of your money out of the bank, and put it into an asset like a rare colored diamond that will not only preserve your capital, but on top of that, give you great returns and is one of the best investments for retirement and for your grandchildren.
Speak with Harold Siegel at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, speak with him personally and privately at 1-800-432-2727. 1022. He has his auction site, hsfineauctions.com. He spoke about it on Bloomberg. The next auction is October 21st, 8 Eastern, 6 Mountain. Mark that down on your calendar. October 21st, 8 Eastern, 6 Mountain. And Harold does online seminars as well. We will let you know when the next seminar is. But connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. It all started with an article, as I said, in August of 2005. Here we are 8 years later. Naturally fancy colored diamonds, the best kept secret. People thought it would be a bad idea to obviously have people learn about investing in diamonds on website. And Harold proved people wrong there. He took it to a whole new level with, obviously, the auction site. His website has video of all the diamonds, something no one else does. Harold has continually raised the bar on this business as he's gone along. That's why he was invited on Bloomberg and has been invited back. And Harold, one of the things we spoke of last week, and I think this is so key, is that it's the enjoyment factor. When Deirdre Bolton put on that diamond necklace that belonged to Liz Taylor, the look on her face was just simply stunning. And I know that when you go back, you'll probably have something else for her to put on, and she's eagerly awaiting your arrival, because that's the beauty of diamonds and diamond jewelry. They can be enjoyed. It's not as if you are about to go out to a cocktail party and say to your significant other, honey, pass the stock certificate. I'm about to put it on. It just it does not work, So that's the beauty of diamonds, in my opinion, is it has that duality to it. Obviously, it is real estate in your pocket, portable wealth, but it has that fashion appeal, which. Watch the interview. We can send the interview out to you that Harold did a few weeks ago on Bloomberg, and you tell me if I'm wrong, but Deirdre Bolton, she was, I watch Bloomberg all the time, and I watch her show all the time during the lunch hour, and she's probably the most happiest I think I've ever seen her. So, Harold, your magic worked thanks to diamonds.
Well, it was an exciting show, and I own the last 8 pieces of Elizabeth Taylor's private collection, and I did sell the 95-carat necklace and the 22-carat earrings right after the show to a very, very fortunate client, and it is spectacular. What I recently just picked up, aside from her a $10 million ruby and diamond necklace that I'm saving for when we start our first auction in Dubai or in Hong Kong. But I also picked up, and my wife's wearing it now, is a brooch that Elizabeth Taylor wore for many, many years. In fact, the provenance on it is that I've got the picture of Elizabeth Taylor actually wearing the brooch. So my wife's wearing that at this point, but it will be coming up for auction. I own the last 10 pieces of Elizabeth Taylor's estate. And again, I can't wait to show that. But the diamond market at this point is just on fire. We're extremely excited about it. Again, the world economy certainly dictates owning hard assets, and that's why the diamond market is doing so extremely well at this point. Again, we recommend very highly the D-Flawless Whites. They do tremendously well. They increase by 15% a year. They never decline in value. They're used as currency in Europe, and they're negative correlated to the stock market. The Argyle Pinks, that's a no-brainer. They will probably go up more than almost anything because, again, they're soon going to be extinct. There will not be any more pink diamonds. And the Yellow Flawlesses are very reasonable, still affordable. They're in the news almost every time. At auction, they're setting records. And if you did see the interview on Bloomberg, the diamond that stood out the most of everything was that 14-carat Yellow Flawless diamond, and we've had so many calls on that diamond. However, it is my wife's diamond, and I promised her I would not sell it, like the last one that we sold off her finger at dinner one night. So anyways, the yellow diamond market is on fire, and you can get involved in diamonds starting at $15,000 to $20,000, and they're better investments than anything out there. And as Randy just said, at the end of the month, when you get your statement and you shred it because you're so disappointed in your returns, but you look at the diamond that's on your wife's finger around her neck, you're going to realize what's the more important investment, and actually, time will tell what's going to make you the most money. I can almost bet that you're going to make way more money in diamonds than you will in stocks or commodities.
Well, and I mentioned this before when we had our seminar in Edmonton. There was actually a few ladies who had stunning rings that Harold had put together for them, and everyone was gathered around and oohing and awing. People don't do that with bonds or stock certificates or pieces of paper. It just does not happen. If you look at what's happening in the world, fundamentally, you have the Fed keeping QE at $85 billion. People believing that Janet Yellen will become the next head of the Fed, and she's right in the same wheelhouse as somebody like Ben Bernanke. I believe in the fall the debt ceiling crisis is going to be huge. The Republicans are already setting up for a major battle with the Democrats, and that $16.7 trillion debt limit will have to be raised. It will be interesting to see what happens. And, of course, geopolitically, as we're taping this show, on the Drudge Report, the U.S. State Department issues worldwide travel alert. U.S. embassies across the Middle East to shut down on Sunday, and that is due to threats from al-Qaeda. And I would imagine that maybe the Canadian embassies would be issuing warnings as well. But a threat to U.S. embassies appears to be al-Qaeda linked, according to the House of Representatives Foreign Affairs Committee. So, Harold, you can see geopolitically that things are very dicey, and that's why we've advocated having hard assets in your portfolio, percentage, whether it be 5, 10, 15, 25%, whatever you feel comfortable with. But if you look at the fundamentals of the worldwide economy, you look at what's happening geopolitically, it's just a prudent thing to do.
It certainly is. And again, I just don't see that things are going to get better over the shorter term because, again, they haven't really addressed what the problems are. They're just printing and creating new money and more debt and more debt. And again, there's a lot of people out there that are brilliant that say that that just is not going to work. And again, I've been in the investment business 35 years. This type of scenario is not going to work. All it is a Band-Aid on open heart surgery when things really start to happen and when the money's being called in and there's no money. The fact is that there's going to be a lot of issues and we're going to see massive inflation because of the tremendous amount of money that's printed. So, again, I'm a firm believer in hard assets. I own a lot of gold and silver physically and I have a lot of money in diamonds. And again, this is a time we're not taking any risks. We're sitting back and doing the right thing.
Speak with Harold about investing in diamonds. RareColoredDiamonds.com. The telephone number 1-800-432-1022. Our featured diamond of the week. It is a stunning diamond. You can see on the website video of it. We have it in our newsletter. It is a .30 carat, hard-cut, fancy, vivid, purplish pink argyle. And if you've always had your heart set on a heart cut, this is your opportunity. .30 carat. Speak with Harold at worldwide, obviously at RareColoredDiamonds.com. Telephone number 1-800-432-1022. Worldwide Precious Metals. That is the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. And during the times that we're in right now, you need to have an allocation of precious metals in your portfolio at all time. We know that in Cyprus, the story just came out this week, they will lose 47.5% of their money of people investing in over 100,000 euros in the bank. We know that is happening. If you want to get some of your money out of the banking system, have it in hard assets, speak with Worldwide. You can have it stored domestically or in a foreign country. You can ask them about that. As well, start your own precious metals investment account, instant liquidity in and out of the market, secure storage insured to the full value of your investment, 24/7 online access, and full-time service from a precious metals expert from Worldwide Precious Metals. They are the only company that Harold recommends you use, a Canadian company in business for over 10 years, and they've been through all the ups and downs in this bull market in precious metals. Harold, we have approximately 30 seconds left. We're sort of in a quiet period for, obviously, the world due to long weekends and holidays, but it's one of those things where now's the time to take a little bit of time and look at the possibility of making some money in hard assets.
You bet, Randy. Again, while things are slow and people are on vacation, again, when things come back in September, October, the markets could be very, very active. So, again, the price on gold and silver at this point is at an excellent level. Don't forget we saw gold as high as $1,900. You're buying it at $600 less than that. I still think it's a great buy in silver. With the shortages and the whole thing, I think it's just a great investment.
Thank you very much, Harold Siegel. Have an outstanding long weekend.
Thank you very much, my friend, and I wish everybody a wonderful long weekend and a very profitable day.
Speak with Harold at rarecoloreddiamonds.com, 1-800-432-1022. His auction site, hsfineauctions.com, auction October 21st, 8 Eastern, 6 Mountain. And Worldwide Precious Metals, 1-866-623-2002 or wwpmc.com to connect with them. You can get our free weekly newsletter from Harold or Worldwide. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.